So let's get right to it with market watcher Adam Kobeissi on the pressure of the Magnificent Seven, I guess, to continue to deliver the goods, Adam. Will they?
Yeah, it's great to be here. Thanks for having me. Today's been a really interesting day. I actually put out a post about this earlier that we're seeing the market hit a new 2023 high today, while the Magnificent Seven is actually trading lower. The Magnificent Seven's lost a combined $300 billion in market cap today alone.
Wow.
But I don't think this is a sign of new leadership in the market. I still think tech and the AI trend are going to continue to lead higher. But we're probably seeing some profit taking into year end. We're going into the Fed meeting on Wednesday, and I think just around the board, everyone's trying to take some risk off because there is still a ton of uncertainty in this market.
Yeah, what happens, Adam, when smart guys like you are planning and trading on this, ahead of this, and you factor in the last couple of weeks of the year? How do you play it? There are some who want to lock in what have been good gains for most folks. Others, I'll take some more chances. Where are you on this?
Yeah, no, I think we've definitely been securing some of our gains and putting on some hedges. And I actually think the markets are very optimistic going into this Fed meeting on Wednesday. It seems like we're seeing another call for a Fed pivot, as we've seen many times before, which is a little bit premature. I mean, the most recent communication from the Fed, from Fed Chairman Powell himself, was that they're not even thinking about rate cuts yet, and talks of rate cuts are premature. Now we see futures pushing as soon as March 2024 for rate cuts. We believe that we're still looking into at least Q2 of next year, and I think the S&P is due for a little bit of a pullback here, maybe 3 to 5%, especially as the Fed kind of hammers home that, rates are higher for longer, or maybe high for longer. I think we have a long pause, and markets are just getting ahead of themselves again.
Yeah, and normally that's something that Jerome Powell likes to, slap down fast and unequivocally. In other words, to say, if you guys are thinking I'm going to be cutting rates anytime soon, you're out of your minds. Now, how will they receive that if that is indeed what he says? Yeah,
I mean, look, every time that we've seen these so-called Fed pivots get priced in days and weeks ahead of the Fed meeting, it's almost always a sell the news event.
Right.
If you look at the annualized returns of just Wednesdays in 2023, it's double-digit negative territory, because the Fed is obviously, the meetings are always on Wednesday. We're always kind of buying into this hype of rate cuts are coming, and then they say, you know what, inflation. I mean, we're still seeing core inflation is near 4%, headline inflation in the 3 to 4% range, and they're made it clear they want 2% inflation, and anything that would risk a resurgence of inflation, including cutting rates too soon, is the exact opposite of what the Fed wants. The Fed would rather see a mild recession and get inflation to 2% than risk a resurgence of inflation and cut rates too soon. And I think that's going to continue to be their mindset going forward here.
Yeah, I started talking about the Magnificent Seven and, Apple getting very close to an all-time high, not so much today. But what do you make of how tech will perform, particularly that group that disproportionately is sort of carried not only NASDAQ, obvious, but the S&P 500, if you think about it?
Yeah, I mean, tech has been obviously the leader. If you look at the S&P 7 or the Magnificent 7, it's up over 80% here. The rest of the index, the remaining 493 stocks, are up 4 to 5% this year. We were actually seeing those 493 stocks negative for a lot of this year, while the market was up sharply. So I think going into 2024, tech leadership is still going to be the theme, and I think the whole AI trend kind of just added fuel to the fire. I think AI is definitely disrupting industries. It's here to stay, but I also think we can't just move in a straight line in either direction. So that's kind of consistent with our call that, with tech leading and with the Fed taking this hawkish but cautious approach, I think we still see, markets aren't heading for a big crash, but I think that we do still see volatility, and I think dip buyers will continue to capitalize on the dips. But ultimately, I mean, I don't see a huge tech crash coming or a huge market crash coming. More just some choppy price action until the Fed figures out what's going on. These AI trends kind of play out a little bit, and ultimately, I think dip buyers are still buying this market, as we've seen for the entirety of this year.
Yeah, they usually pounce when they see that. So we'll see what happens. Adam, great catching up with you, my friend. Appreciate it.
Great. Thanks for having me.